Hello everyone and welcome to the corporate briefing session of Bank Alphala for the year ended 2025. I'm Syed Akbar Ali, Head of Capital Markets and Investor Relations for Bank Alphala, and will be moderating today's session. Today we are joined by the senior leadership of the bank to highlight bank achievement during 2025 and the way forward. I'm pleased to welcome Mr. Atif Bajwa, President CEO of the bank, Ms. Anjum Hai, Chief Financial Officer, and Mr. Parvez Shahbaz Khan, Group Head, Global Markets and Treasury. Firstly, we would have a welcome note from our president, followed by a detailed presentation by our CFO, after which we'll open the floor for Q&A. During Q&A question answer session, you can use the raise hand option, or you can type it out in the chat box and I'll read out the questions for you. With this, I'll just request Mr. Atif Bajwa for his welcome note. So over to you.
Assalamu alaikum. Good afternoon to everyone. It's a pleasure to have you all join us in this call, and hopefully we'll be able to give you a good briefing on the achievements of Bank Alphala and an outlook for the near-term future. It's the first time that in a long time that I have personally also joined this corporate briefing, and it's a pleasure to do so, and I will look forward to having a conversation and possibly answering some of your questions. But in the meantime, I would request Ms. Anjum Hai, our CFO, to please take us through the presentation that has been prepared for your benefit. Thank you.
Okay. Hello, everyone. So can we have the first slide, please? Okay, so I'll be starting with the first slide where we have an overview of the bank. So basically, we are a AAA rated commercial bank. Our majority shareholding is of an Abu Dhabi group. We operate out of 245 cities through 1186 branches. We have presence in 4 countries abroad. Our CAR is 15.87. Recently our market cap has increased to 170 billion. So if you go to the next slide, there we are looking at our operating units. So basically 6 key operating units, and under each we have a very comprehensive product suite. So very diversified product portfolio. We do SME, agri, consumer banking. We are into acquiring business. We have a very comprehensive and strong digital arm. Our investment banking division, which operates under corporate, is a very strong one, along with treasury. We'll talk about more, in the subsequent slide for each of these items. So our next slide is, here we're looking at the digital touch points. So we have over 110,000 touch points. This includes branches and our digital network. So here we are looking at ATMs, CDMs, our e-commerce merchants, and digitally enabled merchants. We are serving around 9.4 million customers. Our debit card portfolio stands at 3.8 million, and our credit card book is around 469,000. Moving on, the next slide shows the growth trajectory of the bank for the last 5 years. The slide has disappeared. Can they still see it? So
no.
Should I carry on? Will they be able to see it?
No, I don't think they're seeing it. This is sharing to me.
Sorry about the disruption. Just give us a minute. We've just trying to get slide back online.
This is sharing me.
presentation आप उस यहाँ से शेयर करें.
So, okay, sorry about that. So here on this slide, we are looking at our growth trajectory over the last 5 years. So I'll talk about deposits first. So CAGR for our deposits over the last 5 years has been 23%. And in 2024, towards the end of 2024, there was a strategic shift in our strategy whereby we started to focus more on averages and purely car average, and we moved away from chasing end of period deposits. But despite that, during 2025, we have increased the deposit book by 16.8%. When we look at gross advances, our CAGR has been 13.8%, and this is a factor of basically the credit environment in which we operate. When we look at the numbers for 22-23, it was a very high interest rate regime at that time, and hence the demand was quite sluggish. In 2024, there was aggressive growth in advances, and there was a factor of the ADR-led taxation, which impacted the strategies of all banks in the industry. And some of the lending undertaken at that time were not on very favorable terms. But that situation has now normalized in 2025. And if we exclude the impact of ADR tax, then our growth in 2025 was actually over 30%. Looking at trade, again, our CAGR has been 13%. This is on the back of mainly import-led growth. Investment is a factor of firstly surplus liquidity and our treasury strategy. Sometimes they borrow to place based on their interest rate view. Our investment book at December end is actually more skewed towards T-bills and VIB floaters. So quite well positioned for this year. We move on to the next slide where we are looking at the deposit details. So our market share for deposits at cutoff was 6.2. For current deposits, this was 5.9. And our CAR mix stood at 38%. As I said that we've been focusing more on averages. So our average CAR growth during 2025 was 21%. And if you look at the split of it, then the Islamic CAR average grew by 33%, while the conventional retail grew by 23%. So quite significant growth there. Moving on, the next slide talks about advances. So our advances market share at cutoff was 7.4%. The average growth in advances was 22. If we look at the segments, then our SME and agri-arm grew by 33%. And the market share for SME was 8.1 and for agri was 4.7. For consumer lending, we continue to be amongst the top two banks in the market, and the portfolio grew by 43%. And for auto loans and home loans, we are the leader, while for credit card and personal loans, we are number 2. The next slide. Here we're looking at trade volumes and remittances. Again, we see growth trajectory. So trade volume 20% up versus last year, and on the back of that, our market shares increased to 9.6%. For remittances, the volumes increased by 8.7%, and our market share is now at 14.7%. On the back of these volumes, our FX income has also increased by 25% over last year. Next slide just shows us our overseas footprint. So we operate in 4 countries abroad, but 2 of these are in sale mode, and going forward, we intend to focus more on our core geographies, which are UAE and Bahrain. The slide shows the size of the deposits and advances in these overseas jurisdictions, which is basically 162 billion in deposits and 54 in net advances. If we move on, then we look at, we're highlighting the digital proposition here. So firstly, what I'd like to highlight that we have been awarded the Best Digital Bank Award 4 years in a row by PBA, and that's basically a recognition of the strength of our platform, and and something which we are very proud of. So digital throughput has increased by 64% to 18.3 trillion. And a significant part of it, 7 trillion of this, comes through our Alpha app. And our Alpha app volumes grew significantly, and our users also, the 30-day active, which we monitor, have grown to 1.3 million. Our digital migration ratio has increased to 90%. And if you look at all the rest of the channels here, we see growth across all, like digital payments, digital lending, everything shows very strong growth versus last year. Move on to our next slide. Here we have a snapshot of the balance sheet. I've already discussed these items, so I'll move on to the P&L. So our profit after tax for the year was 28 billion. And there were a couple of themes which I would like to highlight here. Firstly, of course, versus 2024, the interest rates were lower by 8.3% on average. So that resulted in spread compression, during the period, which we managed to make up through growth in car averages. And then also our treasury strategy paid off because towards the end of 2024, our treasury built positions in long-term bonds, which realized dividend capital gains for us and supported NII when there was spread compression. In non-interest income, all lines were up except for fee commission, where there are two factors impacting them. Firstly, the decline in the home remittance commission income. That's down because of the change in the SPP pricing for remittances. And the second one was the DISP fee, which was down because, again, the contractual terms for that contract was revised, and now it's more NII-driven product. So as a result, our total income is up by 7%. Our admin expenses are up 38%, and the key component here is the home remittance marketing, again, linked to the change in SBP pricing regime. If we exclude that, then the admin expenses actually increased by 26%, and that's on the back of increase in our branch network. Of course, the branches which we opened in 2024 also are having a full year impact this year. Then there are, of course, increments, hiring, and certain lines which were impacted because there were price hikes way above the prevailing inflation. For example, the SMS cost. So quite a few factors putting pressure on costs there. Provisions also up versus last year. The key factor there was subjective provisioning, which the bank took in line with our conservative stance on provisioning, which we follow. Okay, the next slide here just highlights the key ratios for us. I'll just pinpoint a couple. So when we look at spreads, we see that we've maintained our spreads all through the year. And this is a result of our strategy on deposits, whereby we've been pursuing current account and averages. So we can see that we've managed to increase our spreads. The other two ratios I would want to highlight here are the NPL ratio, which is 4.1, which is a very healthy, which is very low, and coverage is 102, which gives us a comfort on the provisioning on the portfolio. So moving on, this slide talks about our CSR initiatives. So during the period, bank gave donations of 300 million and also another 187 million to our Islamic charity. And another thing to highlight here is that we have pledged another $5 million towards the victims and the communities impacted by flood. This is on top of the $10 million which we pledged for the flood relief in 2022. The slide on the right shows where all this donation has gone to support like education, environment, and healthcare, etc. So next slide talks about recognitions. I think that it is moving on. Just want to highlight the risks. So these are some of the BAU risks which a bank undertakes in our day-to-day banking activity. And just want to, again, these as a routine we undergo, we have a very strong risk management department which oversees these risks. We have policies and procedures around, managing and mitigating these risks. So these are considered very BAU in a bank and quite normalized. However, the next slide highlights some of the headwinds which we are presently facing because of the present scenario. And right now it's premature to talk about these. There are quite a few headwinds here, but actually the ultimate outcome of this would really, and the impact on the sector and in the banking, which actually depend on how long this war lasts. So, but just for the information as a possible headwind. I think that concludes my presentation. If there are any questions, we could, take them.
So just a reminder, in order to ask the question, you can use the raise hand option, or you can type in the chat box so that I can read out the question for you. We'll just take a minute pause so that get people time to write down your question, and we can start asking questions from the management.
Is there hand? Okay. Should we start with the Raza?
There are questions.
Oh, we are raised hand.
Yeah, Raza, now can you unmute them?
Yes.
Yeah.
Okay, Assalamu alaikum. Am I audible?
Yes, you are.
Yes, Assalamu alaikum. I'm Raza and I'm from MCB Investment. So my first question is regarding the marketing, advertisement, and publicity cost. Recently, the cost spiked to around 5.3 billion in the June quarter, but recently it had normalized to around 1.5 billion. The marketing and advertisement cost. So is this the new level, and can you give a general idea of what the operating expenses are expected next year? There were certain one-offs in the last year, so can we expect this to normalize in the next year?
Jay, I think you're right that this started normalizing, and the expectation for this year is that this particular head of expenses, which is marketing for remittances, will come down to on an annual basis between 4.5 to 5 billion rupees, which is a considerable reduction from last year. Which we know the reasons for, but this year this item is going to be normalized. And of course, not fully taking into account the inflationary impact that we're likely to see as a result of the Iran situation. I think we would have seen a more balanced increase in our costs.
Including other costs, you are saying that around 4.5 or 5 billion are one-off, which we won't see in this year.
Yeah, so in that head, which was marketing for remittances, which had gone up to about 13 billion last year, we are anticipating that head to be between 4.5 to 5 billion.
Okay. Okay, sir, my next question is that can you give an idea of your exposure in the Middle East? Obviously, with the current situation in the Middle East, there are concerns for NPL. So what is the actual exposure in the Dubai and UAE region of advances and investments?
So, advances, we do have advances in Dubai, but the primary exposure there is in bonds, and that is something where we feel we have, adequate coverage. You want to add something regarding the bonds, Hassan?
In international operations, we are mostly concentrated in investment grade bonds. So in terms of credit, I think we are reasonably comfortable because there has not been much movement in credit bonds which are investment grade.
Yeah.
Okay. Thank you very much.
Thank you.
Thank you, Raza. The next raise hand is from Ajmal Asif. Ajmal, please go ahead and ask your question.
Thank you. So I just wanted to understand your interest income has declined significantly, but your net interest margin seems to have gone up. How could you just shed light on how is this managed?
Interest income, if you're looking at net interest income, our numbers are actually up versus last year.
There's a significant decline in gross interest
Gross.
income, right?
So
Yeah.
gross lines, basically both the yield and the markup are both down because of the reduction in interest rates.
No, that I
But if you look,
understand.
yeah.
But your
So otherwise, you
margins
look
still
at
have
the
increased.
net
Your
interest
net interest
income.
margin has still increased.
Maintain the margin.
We've managed to maintain the margin because of our efforts and the way we have structured the portfolio mix. But why you see the decline in gross lines is basically just because of the decline in interest rates.
Okay.
But
Thank you.
net, the spread is the same.
Better.
Actually better.
Yeah, that's what I was saying, that the spread is better, but the gross amount has declined significantly. So
So
I
if you
guess
look
you
at
guys
it
have
this
done
way,
a good job here.
Thank you very much.
Yeah, thank you.
All right. Next question comes from the line of Rai Heather. Rai, please go ahead with your question.
Ji, Assalamu alaikum.
Sam?
Sir, my question is regarding compensation. The bank is paying 49 billion in compensation head, whereas other banks which have more branches and more number of staff members, they are paying way less. So, can you please tell me what is the reason? Because bank is seems to be very generous, which is good, but that compensation should translate into profits, which are declining, and the decline is, I think, highest in the industry. If we compare the results with 2024, the 2025 results are far more they're not in line with the industry. So can you please explain why bank is spending so much money on admin expenses?
So, Rai, your question has two parts. So let me first look at the compensation piece. So see, we have competitive compensation. We are very much in line with the market. The compensation is a factor of course, the complexity of the bank and the scale. So you see, when you compare us to the banks of our size and complexity, you'll see that our compensation is in line with those banks. And again, in this market, to attract talent, you have to compensate them accordingly. In terms of our headcount as well, we are very much in line with those banks. And I'm not sure, it really depends on which one you're looking at. So to compare Alphala, you need to look at banks in the market who have the same offering. For example, digital, consumer, all of those things add to the complexity of the job and, of course, the human resource attached to it. Now, regarding the fact that why our profitability is down, the key factor for that, which I explained in my narrative, was the fact that we were impacted because of the home remittance marketing. Now, why we were impacted more is the fact that, firstly, Alphala was the second largest player in the home remittance domain. And the change in the pricing structure by central bank, this was something which happened towards end of 2024. So the new structure favored banks with lower market share in remittance space. And of course, to be able to maintain those flows, because those flows are critical for our trade activities, and other banking activities. So we had to spend a little bit more, and hence, you see that impact in our profitability. But now the situation has normalized, and going forward, we expect that, that dent is not going to impact us going forward. Does that answer your question?
Yes, but I have other question regarding dividends. Can you please tell us what is the dividend policy going forward? Is bank going to maintain the payout ratio, and further, how do you see your profitability going forward? Is it going to be at the same level, or you see some improvement in the overall profitability, net profit?
So, two parts. First, the dividend side, the policy is to be considered a safe pair of hands, so consistent payout over the years, and to increase gradually as our profitability hopefully improves over the years. So We are, if you've seen our performance over the last few years, then we've generally kept it reasonably stable for the first 3 quarters, and in the fourth quarter, based on the final profitability, we've been able to increase the last quarter. And we expect that a similar policy will continue in terms of the expectations for profitability for 2026. We're looking at a reasonably good year. However, as you would expect, that we are seeing some uncertainty coming up in the next few months, and that will really, determine how the final numbers stack up towards the last few quarters. But so far, so good.
Okay, thank you very
All
much.
right.
Thank you. Thank you.
Next question comes from the line of Fawad Basir. Fawad, please go ahead.
Ji, Assalamu alaikum. Am I audible?
Ji. Assalamu alaikum.
Ji. So my question also pertains to the prevalent situation. And right now, what we're seeing in the secondary markets is that yields are slightly up, and there is a lot of talk surrounding the increase in interest rates. What we saw in the past was that when the interest rates were on the up, there was the deposits, the industry deposits shot up significantly. Are we expecting something like that? I know it's a fluid situation, but given the current situation, what is the deposit outlook like right now? That's my first question.
So given the circumstances, a number of factors will be affecting deposit growth. First, of course, we always try to see as an indicator money supply growth. And as you rightly said, last year, the overall deposits grew quite sharply, in fact, even beyond money supply growth. So that was, I think the growth numbers were in excess of what we would have anticipated based on money supply growth. But this year, we're not anticipating any significant delta again. However, the other factors that are affecting deposits will be how the general public reacts to this uncertainty. Will there be a desire to move deposits into cash? That's something we are watching. We haven't seen anything big so far, but of course, that uncertainty then drives that kind of behavior where cash is preferred. So far, nothing, but we're watching that space. Also, level of business activity could get affected, and that will also impact the deposit numbers in banks. So just you and us are both watching this space.
Right. Thank you, sir. And my second question is pertaining to the investment book. Now, we all know that the bank acted ahead of the curve while positioning itself post-September, and they cleared out, reduced the borrowing as well. But there was a significant buildup in investments in the last quarter, despite the borrowing going down. So what kind of a position is the book at right now? Our intelligence suggests that there are no headwinds expected, even if the interest rate was up on the investment book.
Good. Thank you for the question. I'll ask Mr. Parvez to answer that question for us.
Okay.
The group head treasury.
Okay, so on the investment side, you're absolutely correct. We did position ourselves in the last quarter because there was an expectation that interest rate will be cut. So we accordingly managed to increase our overall investment book, primarily in T-bills. Secondly, the corresponding borrowing through open market operation was reduced because in the last quarter of 2025, we saw a huge inflow of deposits. So most of the borrowings were offset through the deposits.
And sir, importantly, I know this is just you don't have to answer this, but given what's happened, and more importantly from the treasury front, what is your expectation of on the rates, sir? If you
Okay,
could.
so okay, sure. Our expectation is, we believe that the interest rates have already bottomed out. We were already expecting it earlier before this US-Iran conflict started. So this conflict has actually aggravated the overall situation. And we earlier believed that there could be an interest rate hike at the end of this year, but maybe we might see that hike earlier than that.
All right. Thank you so much, sir, and best of luck for the year.
Thank you.
Thank you.
Thank you, Kumar. Next question comes from the line of Mutahir Khan. Please go ahead. Mutahir, please go ahead.
Can you guys hear me now? Sorry.
Yes, we can.
Yeah. Okay. So I have a couple of questions. Number one is that, you guys mentioned in the digital footprint, or I think around 9+ million customer base. So how many of them are non-G2P? Or sorry, how many of the are either non-G2P or G2P? The second part that I'm interested in is a broader umbrella of digitization. So Alphala is obviously probably the only bank with a digital banking probe with its segment-wise numbers. You guys mentioned that the digital lending is around 97 billion. Is that disbursement annual or the outstanding book? Because if you're talking about the outstanding book, the digital segment's asset side is like roughly 18 billion, if I'm not mistaken. That's two. Number three is, we can go. I can add once you answer as well, whatever is easier.
Sorry, so the first part was how many of these are G2P customers? So that would be 3.5 million.
Okay.
So the 9 million number.
Okay, 3.5 or G2P. Okay.
So G2P, I'm saying is, so non-G2P is 3.5. Sorry, it's the other way around.
Okay, okay.
Yeah. And the second one, could you repeat regarding the lending?
So I think the presentation in one of the slides mentions 97 billion book of digital lending, right? 97 billion for digital lending. So I'm wondering if that is the disbursement number or the outstanding book.
That's
disbursement.
Disbursement. Okay. Yeah. And what number would it be for outstanding?
We could get back to you with that number.
Okay.
It's going to be less than that.
Okay. And the second part of this question is obviously Alphala. We've seen on the consumer side, whether it's cards, whether it's the acquiring business, Alphala has been ahead of the curve for a long time. But in terms of cost to income, it still doesn't perform as well. So my question is, why is that, considering that now the branch transactions are now also channeling towards digital channels, CDM, it's way ahead of the curve, and CDM numbers are doing well overall as well. So why is the why that progress is not reflected in cost to income? And the same for fee total income. The ratio is relatively lower, even though Alphala has a great footprint in most fee income categories.
Okay, so number one, regarding your question on cost to income. So two factors here. Number one, firstly, of course, primarily it's the home remittance marketing. If we were to exclude home remittance marketing, then the cost to income for the bank for last year would be around 56%. So that's like the normalized level. And also to understand, the cost to income for a bank like Alphala, you need to understand, our the products we offer and the segments we operate in. You know, so because we are a majorly retail bank operating, you know, a significantly large consumer segment, and of course, a digital proposition where we continue to invest. So when we look at a bank of our texture, the normalized cost to income hovers around this range only, you know, 50 to 55%. Because retail banks have that texture, while corporate banks usually have a lower cost to income operating level. So, you know, so you need to be mindful of that in the comparison when you compare with other banks. Regarding fee, there were two. See, if you look at my fee income note, you will see that all lines are up. There are two lines which impacted fee more. So if you were to neutralize the impact of those two lines, the fee actually is up by around 12%. And those two lines would be, again, one is home remittance business commission, and the other one is the VISP commission, where again, both were impacted because the pricing changed for these, you know, and hence, yeah. So those are the two factors there impacting.
One final question, or like two part, very small. So you guys have mentioned the throughput side. I'm not sure if I'm able to see the volume side of the key channels, right? So Alpha, POS, and so on. And the second part is that, if I'm not mistaken, the POS and card and e-commerce business numbers in the digital slide refer to the acquiring side. I'm wondering what the uptake is from the issuing side.
Okay, so just for clarity, the volumes which we churn through, if I'm understanding your question right, so if the volumes
Number of transactions, like for instance, 7 trillion is the
number
alpha.
of transactions, yeah, we have not reflecting here.
We can share that.
We can share that. But again, I think you can take the volume as a proxy, you know. Otherwise, we'll share
the
that.
second part, that is fine. If that can be shared, it would be perfect. Because just to get a sense of what the average transaction size looks like compared to the industry average, so that would be helpful. But the second part would be I guess the 470 billion is the POS acquiring throughput. Similarly, I mean, I'm not sure actually. So if you can just give a sense of the acquiring versus the issuing numbers in this smaller bit of the pie chart.
Okay, so I think we'll have to get back to you with those numbers. It's also, see, the issuing part of the game for credit card comes under slide, you know, just to give you a texture, it comes under slide 7, where we are showing the new cards issued and the volumes outstanding. It does not highlight the fee income or the throughput, but it gives you, that's how we look at credit cards, regarding how many we've acquired and what's the end of period ENR.
That's the financing side, right? That's not the spend side. I'm looking.
So just since we don't have what you're, I'm just directing you to what is available in the stack. But we can get back to you.
That would be good. Perfect. Thank you so much. Thank you so much.
Thank you, Uday.
Best of luck.
Next question is from Aram Ahmed. Aram, please go ahead.
Yeah, Assalamu alaikum. This is Arun from Arif Habib Limited. My first question was regarding the deposit strategy. The presentation noted that the CAR ratio currently stands at 38.2%, unchanged from last year, and the CASA actually declined from 77% to 69%. Regarding my first question, how do we expect the current account ratio to evolve in the years going forward as the bank continues to target low deposits? We've seen in other banks as well, they target a CAR ratio of around 50%. And secondly, what exactly is the reason in the decline of the CASA ratio? Because if the current account ratio has been remained constant, so that probably means that the savings ratio has declined. And my third question is, I don't know if this has already been covered, but what is the bank's PIB book split? So what percentage of the PIB has been invested in fixed rate instruments and what has been invested in floating rate instruments?
Okay, so one at a time, and remind me if I've missed something. So firstly, CASA. Now, CASA, yes, you're right. At year end, the CASA ratio went down. Actually, that was something of a customer-led activity because our term deposits went up. It's not something, which you were very actively soliciting. But I can just, highlight that these were normal, BAU term deposits on normal pricing and, a good spread. So, and that's something, which has impacted us at cutoff, but it's not causing us a hit on the bottom line.
But also we're chasing averages, not
Sorry.
averages versus period end. We don't chase period.
Yeah,
end.
we don't chase period end as well.
So if just to clarify that, there is an impact because we've changed our strategy. We don't chase period end numbers for current account deposits. We chase averages for the month. So the consequence of that is that at the period end, we don't have those spikes that for one day current account goes up for the month end or period end and then drops the next day. So we've done away with most of that practice, and therefore the impact is that the current account, at least on period end, seems to be lower than it was in comparative periods in the previous years.
So regarding your direction on how we foresee the car mix to be going forward, it should hover around the same range and actually improve slightly. But as Atif highlighted, that we are pursuing not a cutoff number, but averages. So we cannot give you a very hard, fast number because the numbers which you see here are usually cutoff driven. But in terms of averages, we will continue to pursue average current accounts and profitable deposits wherever we have a positive spread. Regarding PIB, I will ask Parvez to take that part of the question.
Okay, so I think you asked about the mix of fixed rate bonds versus the floating. So in our overall investment book, primarily the PKR investment book, we have around 27%, which is PIB and some portion of fixed rate FRR, which is the fixed rate sukuks. So that's 27% of our portfolio. 33% is T-bills, and the rest 40% is either floating rate PIBs or there's some portion on our Islamic balance sheet, which is the VRR, the variable rate sukuks.
Ram, does that answer your question? Is anything left? All right. Next question is from Anas Motiwala. Anas, please go ahead.
Thank you. Can you clarify please कि जो आप लोग remittance का कह रहे हैं कि normalize हो गया है तो ये pre I think ये पिछले 6 महीने की जो losses हो रहे थे that is expected to be covered and it's going to be as profitable as it was before this price war?
No, unfortunately, it will not be going back to the levels of 2024 and earlier. I think there is of course, the government has reduced the rebates that are offered for remittances, and also there has been an understanding to reduce the level of marketing spend that's going to be incurred by each bank. There is an MOU. So it'll be less than last year, but it will be higher than 2024. So when we say normalized, it's really a new normal, but much better than last year because last year was crazy.
Interesting. Can you quantify that? कि कितना तकरीबन bottom line पे फर्क पड़ेगा? यहाँ से मतलब from the bottoms, how much इसमें EPS पे कितना impact पड़ेगा? Is there some sort of quantification जो आप provide कर सकते हैं?
Marketing expense का मैंने idea दिया था आपको roughly.
Sorry, Anas, we cannot give you those specific numbers, but we can say that it's going to go down significantly.
Okay, fair enough. ये जो digital side है, if you can, आप थोड़ा सा explain कर सकते हैं कि पीछे तो I think वही Temenos या Oracle और के systems होते हैं. So on the digital banking side, you guys have your own development arm जो वो products वगैरह और बनाते हैं, which is why the cost on that side is elevated. If you can give some sort of color on that, please.
So it's not just the system. Of course, there are separate systems which, house our digital offerings, but it's also the team around it, which, is sort of developing those products and marketing and selling them. So it's the whole infrastructure around the digital, which adds to this cost.
But to your point, I think it's, there is a development team which we believe is larger than other banks. And I think that is what gives us that competitive edge in being able to constantly produce value-added products and stay ahead of the market. And a lot of this investment that is being made in new product development is expected to give us the returns in the coming years. So we're still in an investment phase where we're continuously improving our product set on the digital side, covering more segments and a broader range of products.
Thank you, जी. कोई idea है कि किस तरह के products हैं? Are these lending products? Are these investment products for the customers वगैरह? Any sort of interesting things you guys are working on?
जी, so they're all over. There's this slide that we're going to put up to just remind you a little bit on that. So there are of course payment applications. What we're trying to do is capture as many payments that go through the economy in our digital systems, and that's our target, and that's where you see that the throughput is rising quite rapidly. Just in digital payments, you can see that there's been a growth of 106% year on year. Once you capture the payments going through digital systems, then you better understand who's making those payments, under what terms, and whether they need credit also to support their businesses. And that's where you see the digital lending side come in then. So we develop credit scoring methodologies which help us lend in a safer way. And so digital lending has been growing also quite rapidly, and we expect that to be a growing number in the years to come. Beyond that, then we go beyond payments and lend. Of course, while the payments are going through our system, a fair chunk or a percentage of that falls into deposits that stay with us. And so we classify that under our digital deposits category. So we're monitoring those three main items. And then beyond that, then we are looking at how to develop digital lifestyle products, so that it's not just regarding financial services, but it's anything that touches with other aspects of your lifestyle habits. It could be purchases, marketing. So we have Alpha Mall, so you can go purchase digitally there. You can also borrow for purchasing through our BNPL offerings. Then we have merchant solutions to help merchants actually migrate their businesses to digital. We also are trying to make digital branches, lifestyle branches, where it's very convenient for people to come in and do their transactions without touching any or having any human interaction. So all those things are add-on services, just examples of that. There are many more that we have, and we're working on to improve that further.
Fair enough, जी. Thank you. That was very enlightening. एक आखिरी मेरा सवाल है कि ये जो dividend जो आखिरी quarter का ₹3 था, are you guys able to provide any clarity कि is this the normal dividend या वो पुराना वाला ही होगा, and then year end whatever surplus the bank deems, या are we on a higher dividend base?
I think like I gave you that overall strategy that we want to be reasonably consistent in the expectation of the market. So if you look at the trend line or the history of our last few years of dividend payouts, I think you'll see what you should expect for the coming quarters.
I appreciate it, Ji. Thank you. Thank you for your time.
Sohail Tai is the next one. Please go ahead with your question.
Ji, Assalamualaikum. Good afternoon. Sir, I just have a question on the sale of the Bangladesh operations. In your AGM notice, you mentioned the sale proceeds of about $47 million. But then you also mentioned that the transaction will be done via merger with Bank Asia. So are we going to have a shareholding in the surviving entity and there'll be no exchange of cash? I just wanted to clarify.
It's a cash transaction. We will sell to Bank Asia and they will merge this into their entity. We will be taken out by cash.
Got it. Thank you.
All right. Next question from Murtaza Hassan. Please go ahead.
Assalamualaikum. My question is on the investment book. Can you tell me the weighted average yield and duration on the fixed PIBs and what's the average spread over T-bills on the floating rate portfolio and VRA? Thank you.
Okay, on the floating rate PIBs, our yields are somewhere around 11.75. That's the ballpark number. The fixed rate PIBs are 13%. The T-bills are close to 11%, and the other, the variable sukuk, that's also 11% plus. And the fixed rate sukuk is 15% plus.
So does this answer your question? Okay. We have a few questions in the chat box. So the most favorite one is with reference to the composition of the investment book, which you've already answered. The next question is from Nadeem Ilai, which is about what is the branch expansion plan for calendar year 2026?
Okay, so we will be opening branches. We intended to open branches, for both on the retail and the Islamic front. But there is an evolving situation which we will monitor because of the Iran war. Otherwise, our plan is to open more than around 50 branches in this year.
Thank you. Fawad, there's a follow-up question. There's a reference to the stock split. Would it be possible to have an update on the potential stock split announcement communicated earlier by the bank?
Okay. It's been approved.
It's been approved, and it's going to, I think the book closure for that is going to be in April. So it's going to be affected in this month.
All right. Thank you. A couple of questions from Suklan Paracha. One is related to the policy rate outlook going forward, and what is the remittances situation and impact of the ongoing war?
Parvez, you want to?
Yeah, first part after.
Yeah. Okay. So I think I've already highlighted in my earlier comments that we expect that the policy rate will increase going forward. It could be as early as next policy rate in April or perhaps in June, depending upon the evolving situation on this US-Iran conflict. And obviously its impact on domestic inflation and exchange rate.
And as far as the second question is concerned, possible impact on remittances, I think that was the question. Of course, I think almost everybody is concerned that remittances will be affected because our two main remitting countries are Saudi Arabia and UAE. And it looks like employment in those countries is going to be affected in the coming months because their own economies will have to go through some readjustment and uncertainty. And as a consequence of that, we're anticipating that remittances may go down. And as a scenario planning for our own exercise, we're looking at up to 20% reduction in the next year. But that's kind of a worst case scenario planning that we do.
Thank you, sir. We have no raised hand at the moment, and there is no remaining question in the chat box. I'm close to the end of the meeting time. I just request Atif Saab to have just concluding remarks for.
And thank you very much for listening patiently to the presentation and then asking some very insightful questions. Hope we have answered your questions adequately. I think in the end, just suffice it to say, we're living through some difficult times, uncertain times. But within that, we remain optimistic and hopeful. While we do anticipate in the short run there will be some shocks, but depending on how the geopolitical developments take place in the next couple of months, and there may well be opportunities also for Pakistan. As you all know, it seems like Pakistan is playing its cards well on as far as this problem is concerned. And if we are able to have some degree of settlement, which involves bringing Iran back into the economic mainstream of the world, then we may end up benefiting from that significantly. And I'm sure there'll be a reconstruction exercise in the GCC. And again, we should present ourselves as a partner for that reconstruction effort as well. So while things look bleak right now, but there could be a silver lining, and we should remain hopeful and optimistic. Thank you very much.
Thank you, sir. Thank you everyone for joining in. And from today, to host you in the next quarter's results. Thank you.